Hi all, welcome to my channel Satish Vlogs. In this video, I would be explaining the concept of fixed asset. What is a fixed asset? What are the journal entries when the fixed assets are purchased? How these fixed assets should get reported in the financial statements? All these details I would be covering in this video. Fixed assets are the assets which are being purchased by the organization in order to generate economic benefits over a period of time. Okay? These fixed assets are primarily classified into two categories. One is the tangible fixed asset and the next one is the intangible fixed asset. What are the examples of for an tangible fixed asset? Plant, furniture, machinery, fixtures, etc. What are the examples for an intangible fixed asset? Patents, copyrights, technical know-how, etc. Okay? Fixed assets are not held for resale. Okay? Fixed assets are valued at a historical cost. Historical cost means the cost at which it is acquired, which includes purchase price plus any incidental expenses which has been incurred to acquire the fixed asset. Incidental expenses could be transportation expenses to transport the fixed asset from the vendor place to the factory, and also installation expenses which has been incurred to install the fixed asset, and if any wages or salaries has been paid on the man hours which are being spent by the laborer to install that fixed asset, all these things would get added up to the purchase price of the fixed asset in order to derive the historical cost. Okay, right. These fixed assets, there is a useful life attached or designated to these fixed asset. Okay, and there will be a decrease in the value of the fixed asset because of the wear and tear or passage of time. The methodology which has been adopted to compute the decrease in the value for the tangible fixed assets is the depreciation. Okay, and the methodology which has been adopted to compute the decrease in the value for the intangible assets is the amortization. See, what is the depreciation and what is the amortization? How these concepts are exactly, all these things would be provided in the video which would be posted in my channel soon. Okay, with this introduction, let's move to the next slide. In this slide, there is a cycle, there is a diagram which depicts like a cycle, which is nothing but the accounting cycle. What is an accounting cycle? What are the phases of an accounting cycle? All these details I had already shared in my previous video on accounting cycle, and also I would be providing the link in the below box. Request the viewers to go through that video before getting into the details of the current video on fixed asset in order to gain better understanding of the current concept. Okay, now as mentioned, I would be considering the phases of accounting cycle in order to explain my concepts. Okay, as a first phase, which is a business transaction, purchasing of fixed asset is a business transaction. Okay, hope this is clear. Let's move to the next phase of an accounting cycle, which is a journalizing phase. When the fixed assets are purchased, normally the business entity would be receiving the fixed asset, and in consideration, business is supposed to pay the money, right? So the entry would be fixed asset account debtor to bank account. Now tell me, what is the what is the account which this fixed asset primarily falls? This is a real account. Okay, what is the golden rule for a real account? Debit what comes in, credit what goes out. So what the business would be receiving? Fixed, the business would be receiving the fixed asset. What the business is supposed to pay in order to receive the fixed asset? The business is supposed to pay the money in terms of cash or bank. Okay. Hope this is clear. Now let's move to the third phase of an accounting cycle, which is ledger postings phase. What is the ledger posting phase? For whatever the journal entries which were created as part of generalizing phase, for those accounts, the ledger accounts are supposed to be created in ledger postings phase, and the entries are supposed to be posted in the respective ledger accounts. Okay. So what are the ledger accounts are supposed to be created in third phase of my accounting cycle? One is the fixed asset account and the other one is the bank account. So we will create these accounts in the ledger posting phase and the entries would be posted accordingly. Okay. Hope this is clear. Let's move to the fourth phase of the accounting cycle, which is a trial balance phase. Trial balance is nothing but the summary of the balances of the ledger accounts. Okay. Right. There are two ledger accounts were being created as part of third phase of my accounting cycle, which are fixed asset account and the bank account. The balances for these accounts are supposed to be updated in the trial balance. Okay. The balances under the debit side of the trial balance and the credit side should get matches up, because as we have been following double entry system of accounting, so ideally the amounts on both sides should get matches up, which means the debit should equal to the credit. Okay. Now let's move to the last phase of the accounting cycle, which is a financial statements phase. What are the primary elements of the financial statements? One is the income statement and the other one is the balance sheet. Okay. As these are real accounts, which is fixed asset is a real account, bank is a real account, then these accounts doesn't impact my income statement, because my income statement would get impacted only by the accounts related to the things which falls under nominal accounts. As these entries are falling under real accounts, this doesn't impact my income statement. Now these would impact only my balance sheet. My fixed asset would get reported under the asset side in the balance sheet, and also my bank account would get reported under the asset side in balance sheet. Hope this is clear. With this, I hope the viewers are able to understand what is a fixed asset, what are the journal entries for fixed asset, how these fixed assets should get reported in financial statements. All these details, I hope the viewers are able to understand this concept. If the viewers are really like my video, request you to like it, share it to your friends and subscribe my channel for more videos. Thanks for watching. Catch you in the next video.